the MACD and the RSI. What are they? Well, let me explain. The MACD, or the Moving Average Convergence Divergence, is an oscillator commonly used to determine the momentum of a trend or identify a potential trend reversal. Did you hear that? The MACD is commonly used to determine the momentum of a trend or to identify a potential trend reversal. The Relative Strength Index, also known as the RSI, is a momentum oscillator that measures the speed and size of price changes, which is widely used to identify overbought and oversold levels. Time out for a second. Let's really talk about overbought and oversold levels. Okay, this is the cornerstone of a market. A market thrives on fair prices, right? The prices where the buyers and sellers both agree and feel like this is a fair deal. All right, both parties win, nobody loses. Now, when you have overbought markets, meaning people bought it up, typically when it's overbought, that means that the price was very low and people jumped on it. And as the people jumped on the price, it grew higher and higher and higher in value. So it became very expensive. That's why it was overbought, because the buyers pounced on it at that price that was a good deal. So it went beyond a fair price into the good deal. So a lot of times this is the buy the dip. When everybody buys the dip, when everybody buys it low, the supply depletes. And once there's not as much supply left, the demand for it kicks in. All right. Now, oversold levels are just the opposite. Oversold levels are when the sellers got rid of it, started selling it off. Maybe they were holding it. The price, they didn't recoup their money back, or they just wanted to get rid of it, offload it. They oversold it. So all of the sellers started to panic. Maybe they were concerned that the value of their stock would soon decrease, so they wanted to sell it. It's almost like real estate, how the bubble is high and everybody has a house, and at first it was like, oh, my house is worth $1 million, and now they're like, let me try to sell this before the bubble bursts, and then I won't be able to get $50 for it. So that's what the oversold is, when people just dump it, and as they sell it or make more available, as the supply increases, the demand goes down, and now that impacts the pricing in a negative way. So oversold, a lot of times things are very cheap. Overbought, things are very expensive, and we want the fair price, which is often in alignment with the average price. Don't let that go over your head. All right, so how can MACD help you trade? Let me explain. When the MACD line crosses above the signal line, it's considered a bullish signal where buying calls. It indicates that the price may change direction. In the example below, the stock price climbs up after a long downtrend that lasts for a month. Shortly afterward, the MACD line crosses above the signal line, forming a bullish crossover. We talked about that in the last video. Investors may open a long position, or investors may buy here to profit from the potential uptrend. how can the RSI help you trade? When the RSI climbs above 70, the security is considered overbought. When the RSI drops below 30, it is considered oversold. In the example below, the RSI drops below 30 after a long downtrend. It stays in the oversold area for a few days, indicating that the downside momentum is strong. When the RSI climbs back to 30, an uptrend may pick up. This can indicate a good time to buy the stock, as it usually means the oversold period is ending. Is it better to combine the MACD and the RSI? Let me explain. While both the MACD and RSI can be useful in identifying price reversals and trend momentum, they have their own limitations. For example, the MACD measures past price changes, so it tends to be late in giving signals. This is the problem with most indicators. Most indicators are lagging. Also, when unexpected spikes and lags in volume occur, the RSI may provide false trading signals. Again, so moving averages, indicators, a lot of these are points of reference, and that's why we want to use multiple confirmations so that we're not over relying on one particular indicator, because a lot of times for it to tell you what's happening or what is about to happen, that's impossible. All it can do is tell you what has happened already, so it's lagging. So what we're going to do is we're going to combine the RSI and the MACD. When that happens, swing traders can make the most of these two indicators together. A bullish bearish signal confirmed by both the RSI and the MACD can be more accurate and reliable than just one or the other. So how are we going to go about combining the MACD and the RSI? The convergence between the MACD and the RSI equals a confirmation. So this is how we're going to combine them. In the example below, the RSI drops below 30 after a downtrend and stays in the oversold area for a few days. A bullish signal is generated when the RSI rises above 30. Fearing that the uptrend momentum may be weak, swing traders may wait to see if the MACD line will rise above the signal. When a bullish crossover does appear in MACD, the strength of the uptrend should be confirmed. Swing traders may decide to enter a buying position, a call. Divergence between the MACD and the RSI. It might not be a good idea to enter a position when the MACD and RSI diverge. So remember, convergence is converge when they merge with each other. All right, divergence is when they move away from each other. So the divergence between the MACD and the RSI is a sign that it's not a good time to enter. All right. In the example below, a bullish crossover is formed in the MACD, indicating an uptrend. However, the RSI is in the overbought area, far away from the oversold area. It's possible that the uptrend is nearing an end. Swing traders may choose to take the risk and wait for another entry. The bottom line, since no indicator is 100% accurate, like I just previously said, combining the MACD and RSI can help swing traders maximize the value of the two. With technical analysis, using several indicators at once can simplify decision making. Don't forget to test your strategy in paper trading first. All right, so let's be clear. Day traders open a position and close the position on the same day. This is crucial. Scalpers are people who are in and out of a trade in, 2 to 10 minutes. A day trader does not carry open positions onto the next day. They either close and take profit, or they close their positions out at a loss. Day traders open and close their position on the same day. And scalping is a version of day trading. Swing traders are typically making trades 3 open and closing trades 3 to 5 days apart. All right, opening on Monday, maybe closing it on Tuesday, Wednesday, Thursday, Friday. So swing traders are holding their position overnight. So there are some strategies that are more beneficial to the swing trade. Perhaps this MACD RSI combination is one of them. And we've seen that a great option strategy for day traders is the VWAP MACD combination. All right, so we have VWAP in the MACD for day traders and the MACD RSI for swing traders. Again, these are just example strategies provided by Webull just to help beginners have a foundation for the decision making and a strategy to help them make money in the market. Now, they can take this information with a grain of salt, mix it, master it, do whatever they choose. Okay. But keep in mind, there's a major difference between day trading and swing trading. So the key takeaways: the MACD line crossing above the signal line may indicate an entry point. The RSI line climbing back to 30 from oversold may also indicate an entry point. We want to see convergence. We want to see those two things collaborating. A bullish bearish signal confirmed both by RSI and MACD is more accurate and reliable than using one or the other. All right, 2 heads are better than 1. It might not be a good idea or a good time to enter a position when the MACD and RSI diverge, when they are moving in the opposite direction, when they are not confirming the same thing. All right. Peace and love. I hope you get rich. Please subscribe to the channel. Leave a like. Leave a comment down below. Let me know if you prefer day trading or swing trading. And also let me know if you have ever used the MACD and RSI combo. How did it go for you and how is it working? Peace and love, and I hope to see you in the next video. I hope you get rich. Please take notes. Share this with somebody who you think might benefit. Let's get this video to 1,000 likes, 100 shares, and I'll see you then. Peace.